phenomenal opportunity to talk to a truly revolutionary team in the space in Revest Finance. We'll be talking about Resonate and everything that goes within their new project. So thanks so much for joining us today.
Of course. Well, thank you for having me, Relentless. I suppose I should also thank you for your service, and it's great to be
Appreciate
here.
that. Yeah, happy to have you. So before we get started, I just wanted to put this out to everyone. Rob and the team have generously sponsored a giveaway for $200 worth of Revest that we'll be running a drawing for at the end. The requirements were in our Twitter post, so you can hop over there and make sure to get yourself entered if you're here in the AMA. I'll announce the winner at the end, and just be aware that in order to win, you have to be present in the AMA. So when I announce the winner, just ping me in the AMA chat that it's your Twitter handle, and then open a ticket, and we'll get everything taken care of from there. So with that, Rob, you want to go ahead and introduce yourself, give a little background?
Little background on myself. I'll just go ahead with myself. So I'm Rob. I'm the CEO of Revest Finance, and I'm here today to tell you guys about our latest product, Resonate. I've been in the space since 2013. Came in on Bitcoin and have just been kind of hanging out ever since. Didn't get involved in building until early last year when started a validator and been working ever since.
All right. A lot more experience than I have either way. So
Definitely a good story or two in there. Dear Lord. I dropped out of school to come and do this. It's honestly it's really cool being here. I was doing a doctorate and got bored with it. And turned out I'm actually very good at crypto. Who knew?
hey, I mean, at least you were good at it. It's able to pay the bills. I know some people who went full time in this, and it's not going so well as well for them. Hence, I can't quit my job. That's for sure. But
It's different when you're building versus trading. Trading, God no, don't let me near that.
yeah,
I don't
yeah,
even
I'm
want to
not.
talk about some of those NFTs, man.
Trust me, I don't want to talk about half of the things that I did in my first 6 months. So, but hey, lessons learned.
Hey, we'll all make it next time.
Yeah, that's what they keep telling me. We'll see. So, all right. So with that, what was your inspiration to start Revest? And then for anyone in the audience who isn't familiar, would you mind giving an overview of exactly what Revest is, so that they got a good foundation of understanding before we talk about Resonate?
Yeah, so Revest is basically it's a way to transfer financial positions as NFTs. Stuff like bonds, stuff like debt, stuff like structured products or derivatives, vesting positions. You can just wrap them up in an NFT and sell them on OpenSea. Makes them a lot easier to push around. Got a staking position you want to get out of? Well, go ahead and sell it. It's that easy. We make it very simple. And what inspired me to create this? Well, it all started with an interactive NFT I created. I wanted to build, like I said, it all starts actually with Minecraft of all things. Got into programming because of Minecraft. And I wrote a Minecraft mod. It's called Explosives Plus. It had an explosive in it that used chaos theory equations to create a really pretty explosion. I never actually released that part of it. Got bored. Stopped working on it. And when the bull of 21 showed up, I started seeing these things about NFTs. I'm like, what the hell is this? So I was like, oh, it's art. I could do that. So dusted off that old set of equations, started working on some rendering, and next thing I know, I've gone and rendered a piece of artwork in JavaScript, called it negative entropy, made a decent little chunk of ETH on it, and that was really my first foray into the EVM space. Taught myself Solidity to do that. And I was sitting around one day playing around with JavaScript-based NFTs when I realized, wait a second. What if I were to just go ahead and put money inside these things? What if I actually, put tokens in there? And that kickstarted the idea for what became Revest.
All right. Yeah. So I've been fascinated by Revest for a while because when I first got into the space, one of the guys who's been kind of a mentor for me in a couple different things, he got me into buying my first NFT, which was I think a Stonk Society NFT, um, and then like a Bit Daemon, and I'm like, I didn't know what I was doing, but they looked cool, and he's like, oh, you should buy one of these, and so I bought one, and then not even like 2 weeks later, maybe he sends me the website and this white paper on Revest, and I'm like reading it, and I'm like, bro, I don't understand this at all. Um, all I mean, I do now, but at the time I was like, I don't know why you sent me this. This makes me feel really dumb. Um, but now that I do understand it and having, started to, at one point I invested in the Liquid Driver and utilizing the VNFT through that, I've only became more fascinated. So I was, I think it's a super awesome project and um, pumped to
Appreciate
talk
that.
about Resonate, how that goes forward. So, so yeah, so with that, so since since you founded Revest and then as you started to progress to Resonate, what was the problem you realized needed to be solved that led you to create Resonate?
Yeah. So, well, there's two problems that let me create Resonate. One is that Revest on its own is an engine, and it needed a good product. So we had a lot of ideas we were playing around with, and the one that we realized that was the most, I guess, obvious was that there was no good way to get guaranteed yields in crypto. Uh, you want a fixed rate, you want to not have to screw around with waiting on these pools forever and keeping an eye on them daily and being, incredibly active and monitoring your liquidity position. Uh, calculating IL. You don't want to lose money. If you don't want to lose money in crypto and you want to farm, you have to be really active. So we see that as something that turns off a lot of people and really just results in people being left with bad taste in their mouth. So we were thinking to ourselves, how can we use the special tool set that we have here with Revest, with these financial NFTs, to address this problem? And we realized, wait a second, you could just take you could separate it into two different positions. You take the guy who he wants to get paid right now. He wants to get paid a guaranteed amount, so that he doesn't have to worry about what's going on. And we can take the guy who is willing to be a bit more engaged and willing to bet that the yield rate is going to be a certain level the entire time that he's locked up, and we can pair those two up together. And so that's how the idea for Resonate was born, is the realization that the yield farming market isn't really one market, it's two markets. It's people who are open to being that aggressively involved in yield farming, people who need that kind of, who are willing to put that kind of time in, and people who are more risk averse and don't want to take risks on, whether a pool is going to be diluted, don't want to have to check their position 24 times a day, and that we're really trying to cater to that market right now with a one-size-fits-all model. So we set out to solve that, and I can get into the details on what Resonate is if you'd like, but I don't want to just jump the gun too much.
Yeah, that's the next question. I was going to say, give us an overview of the project, and then we'll, break that down into more specific portions.
Yeah, pretty straightforward actually. Basically, Resonate is a system by which, if you've got tokens that can be put in a farm, instead of normally just putting the tokens in there and yield accruing over time based on how many people are in the farm and all these different things, instead of that, you lock your tokens into an FNFT, and we pay you, or well, we don't pay you, but somebody pays you a portion of that yield up front. So you might get, let's say it's a farm that's offering 5%, you might get 4%. You don't get the exact amount you would have gotten. You get slightly less. But you do, get it now. So that means that you've been paid. You can sell all of your yield for a different asset if you want and make sure that if the asset goes down, you're not losing money. You also make sure that if the pool gets diluted, you got the rate that you wanted to get. You don't have to worry about that anymore. You don't have to keep an eye on it. So in that way, it's a set and forget system. You come in, you lock up your tokens, and then at the end of the lockup period, you get them back. In the meantime, if you need to get the tokens out, well, it's an NFT. You can just sell it and get your tokens back. On the other side of that, that's the issuer side, right? The issuer side is for people who want to take a more casual approach to yield farming, who don't want to have to constantly be thinking about their position and whether they're going to get screwed over by other people and what's going to go on with the farm, and people who want more of a passive investment scheme, passive income, not active passive income, which is the current standard. The other side of that is for people who do want that active management side. And those are people who are going to put the money, the time, the effort into figuring out what they think this farm is going to really earn. And they'll offer, a rate that's slightly below that, so that they make a little bit on the top. And that's the purchaser side. The purchaser side, you could say that's the more degen side, but it's also the side that doesn't get money now, doesn't get instantly paid. It has to wait the entire lockup period. So it's a little bit more of a risky side to take. It's got more upside, but it's also got more downside. And that side we typically target to DAOs, because DAOs are in an ideal position to take that side of things. But anyone can take that side of things as well.
Okay, so yeah, so it's two-sided, right? So basically just to kind of recap this, just to make sure I'm clear about it here. So the purchaser or the issuer is taking the money up front, guaranteeing a yield under the understanding that they're going to get their capital back, and they're the 10% per se, right, that they get initially. It's a guaranteed 10% that they can take and do whatever they want with and make other plays, right? It's guaranteed yield under the understanding that it may be worth less than they could have gotten, or it may be worth more. And then on the other side, you have the purchaser who's saying, well, making the gamble that, hey, I think, these amount of tokens are going to be worth this much more, so I'll buy them at a reduced rate under the understanding that that's the degen side, right? That they could
Yeah.
either lose money potentially, or it could be a high payoff play.
Yeah. Maybe they actually control the rate that's going to that pool because they're a whale. And really, they've got some crazy schema to pump their own bags after they get that lock in. There's all sorts of plays you can make.
Yeah, it's pretty fascinating. Um, so, all right. So what are the risks besides obviously the risk for, just like the price variation? What other risks are there involved
But
for
you
either
also,
party?
well, I mean, both parties are accepting smart contract risk, both on
Mhm.
Resonate, which is audited by some of the best in the business, multiple audits, ongoing bug bounty. We've got that angle covered. The other smart contract risk is, well, rug pulls, of course, but we aren't doing this with those kinds of tokens by and large. Um, let's see. You got the farming risk. The farms are Reaper, Beefy, Yearn, guys with good reputations, people who know what they're doing. So you do have smart contract risk, though, always. You have the risk that the yield won't be what you expect if you're taking the purchaser side. That is that's what the issuer is getting rid of. He's getting rid of that risk. He don't have to worry about it. He passes it over to the purchaser. The purchaser's problem now. Purchaser stands to make a lot more than the issuer, but he also stands to lose more.
Okay, makes sense. All right. So now we got a kind of an overview of the risks. So from my understanding, reading through the docs, and doing my own research, two of the key issues that you guys are able to solve here are impermanent loss, to the extent possible that you can, and then concerns about dilution. All right. So one, how does it solve the risks of impermanent loss or the problem of impermanent loss and dilution? And then what other problems does this solve that makes this attractive to potential investors?
Okay. The impermanent loss one you've touched on. We should talk about, should definitely remind me to talk about liquidity incentivization because we've got a better system for that. And yeah, I guess I should start with. I'm sorry, could you repeat the question? It's I need more coffee.
Sorry, I was muted. No worries. Yeah, so I mentioned that it solves impermanent loss and
Yep,
concerns
yep.
about dilution, at least from my understanding. What
Dilution
other
and permanent loss.
problems?
Gotcha. Okay,
Yeah.
I'm gonna jump in. All right, so IL. If you look at the curve of IL x time, it's some weird equation that I have in front of me, but I'm not going to read off because there's no point in reading the equation. Anyways, the IL curve is such that you lose value as the price increases or decreases. And it's shaped a little bit like a parabola, which means that, the more you increase, the more impermanent loss you suffer. The more you decrease, the more impermanent loss you suffer. If you're at the price where you started, you suffer less. Well, you don't suffer any, actually. So what Resonate can do is that by getting that money up front, getting paid up front in those tokens, let's use CrowdSwap as an example. Let's use Velodrome. I think a lot of people here know Velodrome. Let's say that you get paid in Velo. Okay, if you were to sell half of those Velo tokens, let's say you got paid 20%, you would be protected against 66% decline in the price of Velo versus USDC, or a 250% increase in the price of Velo versus USDC. So between those two ranges, where Velo's down by 2/3 and Velo's up by 2.5x, you're not suffering any impermanent loss at all. We've eliminated it because that upfront payment is such that it completely offsets the IL you experience. So compared to traditional liquidity mining, this is far and above superior. Because in traditional liquidity mining, let's say the price of Velo dumps down like crazy in the first month of your LPing for it. Or let's say it jumps up like crazy in the first month of your LPing for it. Well, you don't have enough Velo tokens accumulated to offset that impermanent loss yet in that first month. So you're screwed, especially if it goes down. You're very screwed if it goes down because, now the Velo tokens that you do have, you can sell them, but they're not going to catch up to the amount of losses you've already suffered from IL. It's far and above superior to traditional liquidity mining in that way, at least for the issuer. Now, for the purchaser, especially if the purchaser is a DAO, Resonate is actually far and above superior to traditional liquidity mining in a totally different way, which I think I should also add. And that is that traditional liquidity mining, where you have all these people contributing LPs, it creates an adversarial situation where, I am contributing liquidity and you're contributing liquidity. And if the price suddenly dumps, well, we're going to have to stab each other in the back because I'm going to stab you before you stab me. I'm going to pull my liquidity and I'm going to sell my tokens into the more shallow liquidity pool so I can get out first. Because the price dumping scares me, and I know it scares you too, so it's a prisoner's dilemma. If you don't screw me, I'll screw you, and if I don't screw you, you'll screw me. So it's really an impossible situation with traditional liquidity mining, and we saw that back in May. I know a lot of people here are fans, like myself, of Liquid Driver, and they actually suffered a pretty big hit. People were wondering how that was possible. How did the price of Liquid Driver drop 50%? Well, it's because there was a bunch of liquidity providers. Liquid Driver's got like 70% lockups, but a lot of those remaining tokens, they're in liquidity. And what happened was those liquidity providers saw the price of Phantom dumping, saw the price of ETH, also on the way out, and they panicked. And you can't stop a rational human being who's you can't stop a human being who's panicking with rationality. They aren't going to care about the incentivization. They aren't going to care about that. They're going to run. And so they all started dumping into the liquid driver pool, and that crashed the price 50% just from only 30% of the LPers pulling out. Had those LPers been locked up because they were being paid all of their rewards up front, that would not have happened because they wouldn't have been able to pull. They would have just, they would have received their rewards, they would have offset their impermanent loss, which is the whole point of liquidity mining to begin with, is to offset IL. And yeah, they would have been fine. But with our current liquidity mining schema, protocols inadvertently create an adversarial situation where they're pitting their own liquidity providers against each other. And by pitting their own liquidity providers against each other, they're pitting them against the interests of the protocol. So Resonate helps to resolve that dilemma. And that to me makes us an incredible solution for anyone who is trying to start out in liquidity mining, who is launching a new token and who wants to try something a little bit different. We can offer them a new way forward and a better way. When it comes to dilution, how do we help with that? Well, if you're farming in a pool and there's only, 10 other people in the pool and the rates are, 10%, and you get a yield rate of 7% locked in, okay, now if 10 other people enter the pool and the rates drop to 5%, everybody else got diluted. You've already gotten paid. You don't care that you got diluted. You're happy. So you end up winning. And Resonate can't prevent that dilution from occurring, but it can allow you to avoid becoming a victim of that dilution.
All right. Yeah, great. Yeah. So it really just in layman's terms, it takes out the concern of being left holding the bag. So,
Exactly.
which is I've been there before. So I think all of us have.
I think we all have. Man, I don't even
Yeah.
want to talk about how much Ethereum I spent on that lobster.
Oh man, I don't want to talk about how much Phantom when it was still, I don't know, over $2 I lost in the Phantasm relaunch either. So that was a tough day. But
Ooh.
yeah, my Degenic down here in the audience with team members, we had a hell of a day with that. We were like, when do we get out? When do we get out? When do we get out? When we finally pulled out, it was like the bottom, and then it spiked back up for a while, and then it cratered, and it was like,
I
oh, it pulled
remember
out
the
at like
Phantasm
4.
hack. I helped Double Sharp investigate that thing.
Yeah, that thing, it was like 100x out of nowhere, and then just.
I think it was Phantasm. It's been a while, but
Yeah,
that was
yeah,
was
the relaunch hurt even worse because it's like, damn, it got me twice. Just
oof.
wasn't a hack the second time, but never again. I'll tell you that.
Oh God.
Um, so. So you touched on liquidity incentivization. You said not to let you forget that.
Well, I just talked through it. That's the
Okay, that was all. Okay,
yep.
just making sure. All right.
We didn't listen. Don't worry.
Okay,
I
cool.
mean, don't.
So,
There is delta neutral hedging that we've come up with now, but I'm writing an article.
oh, interesting.
Yeah.
All right,
Long
I'm
story
looking forward
short,
to that.
there's impermanent loss on LP positions, and obviously your goal is to offset impermanent loss, but actually there's also permanent loss because the token's price goes down. Turns out, not only can we hedge away impermanent loss, but actually we can hedge away a decent chunk of permanent loss. And that itself is a very useful tool to have, as it would be, because if you combine that hedging away of about 50% of permanent loss with, under the right circumstances, with a few options, you end up with a system that literally it can't lose. It doesn't win as quickly either, mind you. It doesn't. If you get a 2x on that thing, you're up maybe only 25-50%. But can build a delta neutral system off it. Pretty neat.
Yeah, I'll take a slow win over a loss any day, though. So
That one, that one we're shopping around to the hedgies right now. That's going to get interesting.
Yeah,
Like,
I'm excited to watch that play out.
dude, how does a 66% farm on USDC ETH sound?
That sounds insane.
It doesn't sound like it should be real, does it?
No, not at all.
No,
That
totally
sounds
doable.
like an initial launch APR, or
No,
APY, and then
all
12
year.
hours later it's 7%. So, which I mean, 7% is nothing to shake a stick at, but um, yeah, 66% consistently.
Yeah,
I think you'll get some buy-in there for sure.
yeah, yeah. It's very doable.
Yeah.
You see the
So,
situation where the whales who invest in that thing are actually the ones most likely to be able to boost their own yields.
so there's a little bit of gamification there then, playing the
Cool.
system right.
Oh yeah, definitely. I mean, isn't that the whole point of investing in these kinds of convex light tokens?
Yeah. Yeah, absolutely.
Pump your own bag,
So,
baby.
So, okay, so one thing I want, yeah, right. I'm about to put out some tweets for whatever I own. No, I'm just kidding. No one wants to buy that. So those are most of the things I held from the past are now my my moonshot bags. One day it's gonna
Oof,
pump.
oof.
Elon's gonna tweet about it, and I'm gonna be rich. I guarantee it. I just know it's gonna happen. So,
Jesus Christ.
um, so one thing I wanna ask about kind of is so users deposit their funds, right? They take their 10% upfront, right? And they're guaranteed to get their funds back. What are you guys doing to accrue value in TVL in order to pay out, the interest or the APRs, and then also, I mean, obviously, their money's locked up, but what happens if is there a way that obviously there's not a way that you could go below the total locked TVL, but what are you doing to raise the revenue in order to pay out those APRs?
Oh, so we're not paying out those APRs, right? The way it works is, I mean, are you asking how we make revenue, or are you asking how
Yeah,
those
basically.
APRs are? Okay, the APRs on those things, like me saying, oh, you've got a system that pays out 25%. What we do is we build on other people's systems. So we're built on top of Yearn, we're built on top of Reaper, we're built on top of Beefy, and we use their yield farms as our underlying yield farms.
Okay.
We can do this on normal staking systems too, but we don't run our own, we run our own systems in special cases. Like, for instance, Aura, we're building an auto compounder for them. But typically, we use existing systems wherever possible because, those guys are pros.
Yeah, I mean they're good systems, and why
Exactly.
I'm a
Why
big fan of
reinvent the
Reaper
wheel?
and Yearn, and
I
yeah,
mean,
exactly.
hey, we're
If it
good
ain't
at yield farming. We know how to deal with that stuff. But if you don't have to, no good reason to reinvent the wheel. We make money on the system though by charging 5% on that upfront payout. So when you get that upfront money, we're charging 5% off it. Now, the value that you see on our website, that's actually already had that 5% applied to you. So you're not going to like see, oh, I'm getting, $30 and then you get slightly less. No, no, no. The value you see is what you get. But we charge there, and then we also take 5% on all the interest that the underlying system generates. Never touch the principal. We don't touch principal. It's a cardinal sin in the yield farming world. But interest, yeah, absolutely.
so what is so for anyone who wants to enter this, what is like the initial, okay, it lists your instant payout right here based off the pools, and based on, okay, cool.
You can create your own
So
pool too. That's the thing. Anyone can create their own pool if they don't like the payout and, offer up capital to see if they can attract people to come to that pool. So a semi order book like model, right?
yeah, interesting. And then how does your boosted yield rate work? That's just for, yeah,
That's the
I'm gonna
purchaser
ask.
side. That's the purchaser side.
Okay.
So let's say that you're
Okay,
paying
cool.
out. If I pay out 10%, right, and I get 20%, and I'm definitely, or if I pay out 15 and I get 25, let's use the range trade equations. Let's use them for no particular reason. So if I pay out 15 and I get 25, then what's 25 over 15? That's 66%, 1.66 to be precise, which means that I get back what I paid out plus 66% on top. And what that means is that I just got a 66% boosted yield.
Oh, okay.
I turned a 15%, or no, I turned a 25% yield into a 66% yield.
Gotcha.
Because I'm renting. What I'm doing is I'm effectively renting somebody else's principal. I'm paying them, 15% right now. They're done. They feel safe. If you're a hedge fund, 15% is manna from God. You don't care about, that 25%. You just want a guarantee. So you got your guarantee. You're happy. You're done. You don't have to think about this for the next year. You can go out and, grab a drink with the boys and not have to, worry too much about work. Meanwhile, somebody else, the guy who paid out that 15, is pretty confident that 25 is going to happen. When that 25 happens, 25 over 15, 66%.
Okay, cool. Oh, sorry. I thought I was muted there for a second. Cool. Makes sense. Um, all right, cool. Well, I think we got a good idea of the yields and how the project is structured. Just want to touch a little bit on the V NFTs for whoever might be in the audience that's not familiar. So with your NFTs, you guys were one of the first to start being able to like sell your NFTs, right? As a way to you lock up your capital, but then you can also get liquidity if you need to. Um, but then some people I saw some things in the past and continued just for people who are coming in where they're like, oh well, I'll just get all my money back by selling the VNFT, but that's not exactly correct, right? Because you do take a little trim off the top by selling that NFT, correct?
And that's more Revest, but yeah, typically you do have to take a slight discount and apply it.
Okay, so can you get out from under the NFT in here, or no, because
Yeah,
it's just
no,
locked capital?
no, they're
Okay.
all transferable NFTs. That's the thing. You lock up $100 and you decide, I really you get, let's say you lock up $100, you get paid $10, right? Okay, you got $110, only 10 of which is liquid. We're gonna go with this with the similar example. So you say, okay, you know what? Halfway through, I really need that $100 back. Put it out on PaintSwap. Let's use PaintSwap this time. You say, hey, I got $100. Does somebody else want to buy this $100 for $95? And anyone in their right mind who is willing to wait the 6 months for that to unlock, they're gonna say, wow, I can get $100 in 6 months for $95 right now. Yeah, I'm in. Count me in. So with stablecoins, it's very easy. With more volatile tokens, it's a little bit tougher, but you'll take a
Mhm.
slightly higher haircut on those. But you can get your liquidity.
All right, cool. So the person who took that upfront payment and they get out, it's just like, they just fast tracked basically to getting their money out and still got their initial yield.
Well, they're actually still up because if they got $10
Yeah.
up front and they only took a $5 haircut, they've got
Yep.
$105.
Yeah. Still a win. I guess that's another way you could play it if you really wanted to is buy into those positions and then try to sell your NFTs is yeah.
Cash and carry.
Yeah.
It's a thing.
Interesting.
It's a real strategy. It's used by real hedge funds in the real world and also by 3AC, but we're not going to talk about them.
Yeah, might give people some PTSD flashbacks there.
Jesus
Um,
Christ. Hey
so
man, I know all about that.
yeah, I was not a part of that, but I was following it closely. And man, what a
No, I
I
can
feel
tell you, I've been talking to the venture capitalists in this space. They are traumatized.
I
Those boys
I
are. They like have flashbacks every time they hear about high yield.
Yeah, I don't doubt it. I don't doubt it.
It's
Uh,
like, no, no, it's real. Here's the math. You mathematically prove it's real.
and I mean, on one hand, you got to give it to 3AC. Like I'll take this 20% yield and sell it off, and keep 10%. But I
Yeah,
mean, man,
yeah.
did they screw over a lot of people? Um,
Oh, dear Jesus. I mean,
so
that was a bad play.
yeah,
Done Bertie Madoff themselves.
no joke. So all right. So another thing I want to kind of talk about is governance within how does your governance model? Is it similar to the way that you do things with Revest? Does Resonate play under the same governance model?
Resident has not had too much said about its governance model yet, nor should I say too much. I will
Okay.
say Resonate doesn't have a token yet, right? We launched a
Mhm.
product and we made the conscious decision we're building without a token. We're not going to try to pump our bags, especially not in this market. We'd rather get real adoption and then do that. But the governance model we've conceived of for it is similar to, actually kind of similar to VE curve. It's an evolution of the VE curve concept rather than a rehash. Um, what we do with the Resonate governance model is we take the best of VE curve and the best of Revest. And in our opinion, VE curve is a great model, except for one thing, that it decays. That if you want to just stay locked up like, a lot of people here do, you have to go in and you have to relock every week. I know a lot of you guys here are Liquid Driver fans, and I know each of you is well aware that there is a day of the week, I think it's Tuesday, um, where you have to go relock every single time. And you got to go deal with that. You got to, get it set up, get it handled. It's probably on your calendars as a reminder. And I'm sure it annoys
Forget
you.
to do that so much.
Oh, yeah, no, right? So, our concept for Resonate's governance model is an evolution of that concept, of the curve concept. What we're going to do is we're just going to set it up so that they will be FNFTs. They will, follow a similar model to VE where they do have decay, but you will have to manually trigger that decay. You will have to, consciously make a choice to go in there and click a button that says, I want to start my unlocking process. And at that point, the period of time that you chose to lock for, that's when that countdown begins. If you want to relock at any point, of course, we're going to let you. You will have to begin the unlocking process over again, just like you would for VE Curve. But the general concept here with the Resonate governance model is just to simplify things for people. Make it so you don't have to constantly be thinking about what's going on with my position every week. You want to just stay locked at full power, you stay locked at full power.
Okay. So like with liquid drivers, right? You're relocking so that you can maximize your rewards. What are the incentive changes? And you might have just kind of covered it. I might have just not fully understood. What are
What's
the
the
incentives
what is
each
this used
time
for?
relocking? Yeah.
Yeah, so it's two things. It's a slight rev share off of Resonate. We'll get into the details on those numbers. And it is a meta governance concept where the tokens inside of Resonate have governance power. And there is incentive for those tokens to be used for voting on other protocols proposals, which opens up the possibility of bribes. So
Interesting.
it's some novel concepts we're playing around with. I will not commit to any of that, by the way. All of that is totally subject to change. We're still pretty far out from Resonate Token. But those are the ideas we've been playing around with it.
Yeah, I mean it's cool to understand where you're trying to go with it though. I mean those are yeah. I mean you guys have done a lot of cutting edge things already. It sounds like you're just continuing to build upon that. So
Honestly,
definitely
that's pretty much half of what I do, man. I sit around and think too much.
hey, it's working. It's working for you.
Well, I'll take it.
So All right, so let's see here. Get back. Sorry, I was. Um, and then just a couple. I got a couple more questions, and then we'll get to a couple of the community questions while we still have time. Just I feel like we already, like you said earlier, it's pretty straightforward concept with Resonate, which is one of the reasons I like it so much. It's very simple to understand, and like this could be super appealing to people coming in. And I mean, you built a complex project that's simplified for a lot of users, which I think is going to be very attractive as people start to come back in and we hit a bull market again. Um, so since we've already hit on all that, kind of what chains are you currently on, and then any plans to expand to any other chains? So I know you guys are multi-chain, but for anyone who's not aware, or maybe they're an ETH maxi and they want to do it all on ETH, but what other chains?
So what chains are we on? What chains are we planning to expand to?
Yes.
Okay, yeah. So we are already on Polygon, Phantom, Optimism, Arbitrum, and Ethereum mainnet. And yeah, I'm really happy with this set so far. We're looking we're planning to launch on Shimmer. Those guys are cool. We are looking into that, of course, is whenever the conditions are ready for us to launch. Excuse me. We are looking into maybe AVAX at some point in the future, depending on how that all plays out. Maybe EVMOS if there's demand. I mean, our general strategy is if there is demand in a clear marketplace, we will launch somewhere. If there is not demand in a clear marketplace and we can't clearly make money, we're not going to.
Yeah,
That's
makes sense.
pretty much how we approach these things.
Yeah, it's a good business model. If there's money to be made, go make it. Um, and then some of your partnerships. Who do you guys currently have partnerships with? Are there any that you're working on that you can talk about? I know, you don't want to put stuff out there too early. And then for your partners, what benefits do they get from partnering with you guys?
Depends on the type of partnership. There are several. For instance, our partnership with the ones we've got set up with Yearn, with Beefy, those are more yield farm based, right? That's where actually, Yearn's a bit more friendly. Friendly is not the right word. Closer. Beefy, we built an adapter for their system. Yearn, they helped us out with building that adapter. Those guys are great. Same with Reaper, they helped us build the adapter for theirs. The Reaper's also more in on the different side of the partnership, where they're also, oh yeah, no, we're partnered with Reaper. Yeah, absolutely. Floppy, I see the question. Yes, we are partnered with Reaper. They've got a capital deployment on Phantom right now. That's the other type of partnership we have. I was working up to that. But that's where these protocols are using us for treasury management, right? And they see the ability to grow or their treasury or diversify their treasury or decrease their burn rates. And it's all different varieties of these things that they're trying to do. For instance, Reaper is currently offering people who want to come in and get a bunch of oath. If you lock up your S Phantom into Resonate, Reaper will pay you up front an oath for locking up that S Phantom, and you get to keep all of the yield on that S Phantom that accrues in the S Phantom itself. They're going to harvest the yield that it gets on Granary, but they're going to let you keep the yield that it accrues to itself. So, pretty good deal. We got capital deployments along those lines with MayaDAO. We're coming up with Landex, CrowdSwap, a few others in there. Velodrome, of course. Those are the capital. Those kinds of partnerships are where they themselves are deploying capital into technically the purchaser side of Resonate, and we are helping to facilitate that. Then there's the type of partnership I was talking about earlier, where we're building adapters for their systems. That's stuff like Aura. That's stuff like Yearn. That's stuff like Beefy. And our plan is to turn those partnerships into the capital deployment ones eventually. But those ones started out with we're going to drive TVL and revenue into you, and you're going to help us meet your friends, because your friends can do capital deployments into our system. So it's this network effect we've got. Now, in terms of alpha, well, our GMX adapter for we are working with GMX and Plutus, partnered with them. That's done. I just got word for that, so that's going to be going live very soon. You'll be able, yeah, no, GMX is done. You will be able to get the yield on expected GLP returns, which allows for a great deal of speculation. We're very excited to see how that unfolds. You may have heard me allude to Rage Trade. You heard me allude to Rage Trade.
Yes, sir.
I'm going to leave it at that. You may have heard that Rage Trade has a new Delta neutral vault. Well, it just so happens that some of the people who want to get in on that vault would love to get guaranteed returns. And it just so happens that we have a product that offers guaranteed returns. So, you'll find out more about that soon. But you heard it here first.
All right, I got to work harder to get Rage Trade on here again.
Those guys are cool. We can,
Yeah,
we might be able to make some interest.
Yeah, they're fascinating. I've dug a little bit into them. I learned about them from another server, DeFi Dojo, with the calculator guy. You know, shout out to Steve and run the great server over there. I found out about Rage Trade through them, and yeah, I've been watching them like crazy. That's now I'm really excited to see this play out.
Oh yes. No, dude, we have a lot of interesting friends. The other thing well, this one's very early, but there's some stuff we're working on with that Delta neutral play. That I think is actually going to result in a 66% USDC ETH farm. But I'm
66%.
Yeah. Yeah, actually.
That is that's crazy.
It's doable.
Like, you know, when you think about like some of the crazy APRs that we've seen like over the last, you know, year especially, and like, you know, people at one point were like, oh, 66%, that's nothing, but then it's 66% on an ETH backed asset is
Unreal.
That's wild.
It's insane.
Yeah.
The entire concept is insane.
Yeah.
Your IL is basically offset forever.
Yeah. I'll have to get on a separate call with you one day, and you can explain that breakdown to me, because I know that when I try to read it, it's going to blow my mind. So,
these damn structured product charts, man, they are. This took me a week and a half.
It would take me a lot longer than that. I promise you that. So, all right. Well, thanks for sharing the alpha. I'm very excited about the Rage Trade going forward, and super excited about GMX. I'm a big fan of GMX, and to see that start to work out. Yeah, thanks for dropping that in here. That's exciting. And then I guess my last quick question before we get to some of these audience questions. I mean, there's a million in here if you've been following along. There's some really good ones. I don't know if I'll be able to get to all of them.
I got a hard stop at 5:30, but
oh yeah, okay, all right. Yeah, we'll get a couple in there then. So my last question is, what's the overall end goal for Resonate? Where do you see yourself in the project and in a few years within the financial landscape?
Replacing traditional liquidity mining and being the vehicle of choice for any hedge fund wanting to get involved in crypto. Sorry, DeFi. That's it.
I think that's a great goal.
I don't set small goals.
Yeah, I'm gathering that.
It's just not in my nature.
All right. Cool. All right, so let me see if I can. Well, 0x KMac here, so these are the best AMA questions he's ever seen from a community. So let me see if I can try to pick through a couple of these. All right, Bablu has a good one. Financial or FNFTs is said to form the backbone of the Revest protocol, and this new breed of non-fungible financial instruments may be bought, sold, and traded on any platform, which supports ERC 1155 standard. What is the reason why you chose the ERC 115 standards? What benefits, advantages does this standard offer? And what are your plans? Yeah.
Yeah. So, why did we choose ERC 1155 for Revest or for Resonate? I'm gonna say for Resonate, ERC 20.
Yeah, he said Revest, but since we're
Yeah.
talking mostly about Resonate, let's focus there. Yeah.
ERC 20s don't offer a good way to approach a non-fungible product. You need a non-fungible token because, you know, I can't tell the difference. When you send me 10, USDC, and I've got 5 USDC, I have 15 now. I can't send it back the original 10. I don't know what it is. It's mixed together. And that means that it's really, ERC20s are very bad for tracking complex financial data, like expiration dates, for instance. Which is why when we were thinking about, okay, how are you going to do something that represents debt? How are you going to do something that represents bonds? How are you going to do something that represents derivatives? We went with the NFT. Why 1155? Because, you can have series of bonds. And 1155 is all about series. I can have 100 different copies of an ID in an 1155. And that means that I can sell off 5 of those copies without having to, sell off the entire value of that quote unquote bond. Thus, it makes a lot more sense to use 1155 than it does 721, where I would need, if I wanted to do that subdivision, I would need like 100 different NFTs to represent that same amount of divisibility. That'd be a real problem, and Revest solves that problem. We are already integrated with protocols and networks that offer low transaction fees. To be honest, I just haven't seen any good reason to launch on BSC based on the systems that are currently present on that network. Maybe that'll change, but at the moment, I don't see the ecosystem support that we need to get over that hump.
Yeah, that's fair. Yeah, I mean they got a lot of good things going over there, but if it's not, they also doesn't work for every project. So.
Well put.
And then is Andy R asked, is there a requirement for a crypto asset to be eligible as an underlying asset for the creation of an FNFT?
Is there a requirement for what's the question?
For an asset to be eligible as an underlying asset for one of the NFTs.
No, there's no it just has to be an ERC20. That's it.
Yeah, because you said you can create basically any pool that someone create
Yeah,
any pool they want, right?
So currently on Resonate, we do have to add the pools via governance action. That's one of the things. That's another thing the governance system is actually responsible for, is deciding who gets in and who doesn't. Because you don't want malicious pools added. That would be a very bad idea. So right now it has to be manually added, and for that to work, the staking system needs to have an ERC 4626 adapter built for it. We built a lot of those. We're actually probably some of them. I would say that my team, myself and my Solidity devs, we are the foremost, well, not. We definitely have more experience than almost any other team in the space building 4626. If not the foremost, then I'd say at least top 3. 4626, by the way, is the new vault standard. It's it unifies Yearn, it unifies Aave. It offers a unified way for developers to interact with vaults, with yield farms, right? That's why everyone's losing their minds about it, because it is the universal standard.
Yeah, I saw your announcement with Iron Finance about deploying on those vaults with, I guess, what's it called? The vaulting? Is that the campaign?
Oh, Yearn Finance.
So,
Yeah.
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 So
We're
I'm gonna
deploying a
have to
bunch of
read into
adapters
that.
for that, guys. It's they're not official. I can't say they're official. I hope them to be someday official. But Yearn will now have ERC 4626 adapters. We're getting them listed on the ERC 4626.info site. And we're going to be doing that for Reaper and for Beefy, probably as well. All that is
Nice.
public good. All that is permissionless.
All right. Well, I'm reading through some of these other questions. There were questions about, criteria for assets, but you already talked about how basically anyone create a pool. Some people asked about breaking the lock and, they can just sell their NFT. So that's not necessarily lock breaking, but they can get out of their position. So no worries there.
Exactly.
And then a lot of people asked about your partnerships with Reaper and stuff. We've already talked about that. So I guess
The Reaper
that
guys are
kind
cool.
of, yeah, I got Beavis on next week.
Beavis
So
is a good dude. Love that
I'm
guy.
excited for
Yeah.
I'm excited for him to talk at a level that I can't understand, but I'm gonna try. So
Beavis is he gets things. Just the man is incredible.
yeah, I'm pretty excited. I was pumped when he responded. So like I said, I'll do my best to follow along, but I'll just be like, "What'd you say? Can you say that again?" So yeah, I'm learning here too. So
Yep.
all right, well. I don't want to. I know you got a hard backstop here in a couple minutes. Most of the questions kind of were answered by within the community. Um, oh, well, I guess real quick, we got a last question. What are your thoughts on Relic and how you could implement it and resonate?
A reliquary. Yeah, I'm aware of it. It's an interesting question. Beavis and I have actually discussed this before. And it would be theoretically doable. We would have to build a 4626 adapter for it. But there's no reason that can't be done. If Reaper themselves just prove that you can, in fact, build 40. You can build yield farms for VE systems, right? They just built that. So yeah, it's doable. It would be a bit of work, a bit of doing, but the demand's there, absolutely.
All right. Interesting to see that. Okay, well, I'll run this giveaway before you hop off here. I know you got a hard backstop. I don't want to take you over any time. I had this thing loaded up. Let me
Of course.
run this here and do the drawing. And then, all right, we have the Moose. So whoever is the handle, the Moose, if you're in here, oh, I see you down there. Congrats, the Moose. Open up a ticket. No need to confirm. I can see that. Open up a ticket, and I'll get with you, and then we'll get that taken care of. Congrats, and thanks for tuning in. So with that, yeah, Rob, I don't want to hold you up any longer. I know you got to get going. I really appreciate your time, and thanks so much for joining us. Any parting words?
So much for having me on. Yeah, if you guys are interested in getting paid upfront yield right now, head over to app.resonate.finance and click on the pools list. Or if you want to have even less work to do, just go to the resonate.finance website, scroll down, there's 3 featured pools ready to go for you. So that's me showing my own product, and thank you so much for having me on. Real pleasure.
Yeah, thanks so much, Rob. Have a great day.
You take care. Bye bye.
All right, everyone. Thanks so much for joining us today. This has been phenomenal getting to talk with Rob from Revest Finance. Tune in and see all the things that they're doing. It's a really spectacular platform. Grateful to have had this opportunity. We're excited to see what they do going forward. We'll be uploading this talk to YouTube if anybody wants to hear it again, or if you're hearing it on YouTube right now for the first time, please hit the like button and subscribe to the channel. Once again, I'm Relentless from DeFi Raiders, and we'll see you next time.